Hey everybody, wild day today on the S&P. So we finally are not going to be saying 4,200 every single day, as we now have a new closing high on the index. We're going to address what this means, the key levels, and what sectors actually led to finally breaking out of this little conundrum. Much to everybody's surprise, we had a very clear breakout right here, and we are flipping support and resistance. We're going to explain why this is happening, what names to focus on, especially the ones that came out this evening. Stocks did not break out to a new high, and I think that's important to note. We're going to explain why it did not, and we're also going to explain what stocks moved the Nasdaq today. We're going to go over what happened with Tesla today and why it's substantial. NVDA, I want to go through what is going on there, and I want to walk through a really quick way that you can determine where to put a stop. LULU and why it's up $40 after hours. AVGO and why it's down $20 after hours. Let's get to it. Hey everybody, welcome back. So what we're going to do is we're going to start with the ES. I'm going to apologize if you hear a little reverb. It'll be the last time that you hear it. Finally worked out the kinks, but I have to set up in a different room. So if you hear some reverb, this will be the last time. And I appreciate you putting up with it. As always, subscribe to the channel, click all notifications. What we go over here is extremely timely. And if you've been new and following us for some time, I appreciate it, and I appreciate you sharing, because apparently people are sharing because we're picking up subscribers left and right. So I do appreciate that, and it shows that it comes from the sharing, so I appreciate it. Anyway, let's get to it. ES, this is the hourly. This is not what I was expecting at all today, quite frankly. But we're setting up to break out of the ES, the S&P futures. So come all the way back down here and we start testing this area, right? And this obviously goes basically 24/7. It has little breaks, but you can see how we are down here Thursday morning, and then we just rip. And now we just start getting above levels, and we're holding above those levels. Now, whether or not we stay here, we have some data tomorrow. This is investing.com. I'm just going to go through this very quickly. You're looking for 180 tomorrow at 8:30. Everybody's going to want to be paying attention to that. After that, you have net speculative positions later in the day. But the only really important thing that you need to focus on is NFP tomorrow. 180 is the number. Could it move the market? It could. So we need to be cognizant of that, and we need to be aware that it's going to happen before we're even trading at 8:30. We'll be live when those numbers go out if you're there for the pre-market shows. So here we are, and we have our key levels. So if you are a trader and you are a futures trader, I would suggest that you just take a very quick snapshot of what's marked off here. These levels are pretty significant, and if you've been following us for some time, you'll note that our levels are fairly accurate. So what got us moving? What got us out of here? Well, that's an interesting question. We had a good old-fashioned outright broad-based buying today. It was just straight buying of equities. Now, if you take a look at the market right here, you can see XME. This is metal mining. This was up the most out of any sector. Second is XBI, that was actually up. Now, what's so fascinating about XBI being up is you're going into ASCO this week. So when you go into ASCO, just FYI, that is the oncology conference that everybody watches. So you're seeing that we're up, but we're not up a lot. But what happened today was XBI was up, XLC was up. All these are up 1.25%. They're all setting up. Some are hitting higher highs. The ones that are hitting higher highs are leading. Okay, so XLC is leading. We've been talking about XLC since we broke this level here, the battle that we've gone through, and then how 60 was so significant. And you can see how we've cleared that 60 and how that 60 was resistance over and over again, and how that 60 now became what? Support. So watch that, watch this breakout. You have a little flag here and you're breaking ahead of it. And you have some pretty clear levels here, guys, just FYI, before I drill into the next sectors that you need to be watching. This 6308, you stopped right here. If you get above that 6308 on this index, or sector rather, 64, clear through 64, you just start working your way up right into the supply up here. Well, that's probably $300 Meta, okay, because Meta is the single largest component in here. Google's in here, Netflix is in here. I would look at the holdings on this. But the important thing about today is it was nonstop. XLB was up, XLI was up. You had the consumer discretionary up. Retail actually went up for once, which was fascinating. Financials, which looked to me like they were going to absolutely fall apart after Goldman's comments today. They had some pretty negative comments about stock market participants and their order flow and how it's going to affect earnings, and it had the exact opposite effect. Now, I have a saying I always say in the Alpha Chasers community, and if you've heard it here as well, if you have some negative news and you shrug it off, that is a bullish sentiment, and that's exactly what happened. But you just start running through them all, XLK, and you can just start seeing how we're doing. Now, which two were down? XLP, so they're not buying staples, okay, so they're selling staples and they're selling the Utes. And they're probably selling the Utes because they're out there buying bonds since they're getting 5% on a 1 month. Now, we went through a bunch of levels today. We went through NQ and this level right up here in April, and why this level was substantial and you needed to watch it today. We did that on the pre-market call as well, and we just marked off a bunch of these so that you could understand where you had to pay attention. You can see how we held in here. If we drill into this and do this on a 1 minute and really get into the detail, this was pretty textbook stuff, guys. Really just textbook stuff and just absolutely fascinating. But we rallied up and we knew we had a level right around here that we had to pay attention to, this 14,335. So we're gonna leave it at 332. Well, let's move it up just a hair right there. So we talked about this pre-market and said, look, if you can get above this, it's on. So I actually had a decent short today right here where I actually shorted the market, and I actually also bought puts, and I did okay. Came back down, tested the support, and then that was pretty much the end of it. You could see from there, it was on. So from that support line, which is now 14,289.50, from that level, we just ripped. And what's crazy about these rips is you never even came back to test that level. You never even had that opportunity. Now, why that's important? It tells you how much demand was out there for stocks today, that you couldn't even test this level. So, and now you're going to see this pattern everywhere when you start looking at this. So you just had flag, right? And then you can just see them everywhere, literally. And then here's another flag and then another breakout. And they just kept moving you up from flags. And then those resistances became what? Supports. Okay. So what I would suggest, knowing where this is, you might want to jot this down, that this 1444 level, 14,444, that seems to be a spot that is starting to formulate as a minor support. And I'd call it minor because it was really intraday, where these other levels would be more major because they have more days associated with it, right? Minor, major, hope that makes sense. But it wasn't even the usual suspects that got us going out of the Nasdaq. If you took at the Nasdaq 100, top performer today was Match.com, followed by BidU, JD, PDD. So are we starting to see a little bit of a theme here? Constellation Energy. So you're starting to see that before you start getting into the big dogs like NVIDIA, and obviously their news that went on there. I'm going to close that off. And I would just say this, you've had one close that was a shooting star below. So if you were to look at this pattern, and we're going to get into this intraday, but I want people to understand this because they're everywhere. So if you understand these patterns right here, I'm going to have to clean that off again. Let me do it this way because I don't want to get into that. It'll be too confusing. I'm going to get into it in a moment. But so you can see that there's a line here. Now, if I could make that thinner, it'd be great. But see where you have that line right here? What you're going to want to do with that line is go, okay, well, some will call this an abandoning baby, shooting star. I don't care if you call it a blueberry. Bottom line is if you break out like this, you have a shooting star down and then you gap down, right? Your next bar, if you break that level right there, is always to the low of this bar or around there. And in this case, where was it? It was right to the open. Held the open and you gapped up today, okay? You gapped up today. And we talked about this in last night's video for those that were around and watched it. And I think that's really important that you can start seeing how all these videos are connected. You'll remember yesterday that we said we need to really watch this area right in here. There's a possibility that this was a margin call. It's pretty clear that this was a margin call right now, guys. It was completely indiscriminate. And we've also seen at the same level that this happened with Apple. We can review Apple, we're going to anyway. But you can see how this happened with Apple and NVIDIA at the end of the day. It was just indiscriminate selling, just like you saw indiscriminate buying with Tesla covering the short. So someone had a margin call, they dumped, and then this was the opposite reaction to that. Now, this was actually something that we traded a couple times in the community today, and you can see that level here. By the way, I do read your comments, and I was asked about live trades. I'm trying to post one. I should have one done by this weekend that I can actually walk you through a live trade that I actually did. And you can actually hear the live trading from the community. But I get asked about that a lot, and I do read your comments. So please comment on these videos. It does let me know how to create content, what's helpful. But what you do is you go to the bar where you broke. So you broke right here, right? We can all see that break. Bonk, bonk, comes all the way down. Gap up, never fills the gap. Then all you're doing from that bar on is using that as your stop. Never got there. Tested us, never got there. So once we flipped in here, I bought some, traded it out, got stopped out at the rest of break even, got back involved, and then got back involved later again. But more importantly, what I really want to walk through is this idea. So you could see when you started to clear up here and break, right? But how do you know when to get out of trades? So this was a trade that I did today, and my goal was to hold it to 401.25. Now, the reason I'm showing this is because anybody can do this, and you might want to watch this part a couple times, and I might actually make a separate video on this and a separate video on how to find stops. So one of the things that I would just point out is once you get wicks like this over and over again, we know that wicks are price rejection. So when I got to those, I sold 50%, as I told everybody in the community. I'm closing 50%. So it doesn't, and the reason I do that into it is because one's okay, two's okay, maybe a two's okay. That third one, it's like being hit in the back of the head to me with a frying pan. Like, how many times do you have to see that this bearish engulfing, which is right here, you should learn these patterns. But how many times do you have to see that this bearish engulfing is in control? And if you look at that bearish engulfing going straight across, we never got above it. Boom, boom, boom. And then we flip. Okay, so here is your test of that level, and you are challenging the control of this bearish engulfing, and you're challenging these wicks. Tries to run up, breaks back down, holds here. That is the rejection of the pivot, right? That's your pivot bar right here. Here's your rejection right in here. Here's your confirmation of rejection, and that is where I got out. Again, if you struggle with stops and you're looking for a way, you're going to want to pay attention to what I did there, because there's important parts of that we just went over, okay? We went over the rejection of the pivot and why that was not the trigger. I wanted confirmation. Why did I have the ability to wait for confirmation? Because I sold into these wicks 50%. And then when you leave your other lines in, your support and resistance, you can see that this actually even provided another opportunity in the last 20 minutes of the day, right? Resistance flipped to what? Support. So I hope that's helpful. If you want to see a video on stops, comment below. The more comments I see, the more it lets me know what content to create. Now, there are three names I would like to get into. The first one I would like to get into is Tesla. And what you're looking at is from a website called Market Chameleon. Anybody can go and look at this data and look at it for free, using the free version that's here. Number one stock today, notional volume. Total notional volume today is Tesla. It is not the S&P. It is Tesla. That's big when one name has higher notional value than the entire S&P. And that means that something is going on, and I want to pay attention to that. Now, you can see the trade count obviously is nowhere near as great as the S&P, but look at the total notional. So that means whoever was making their bets on Tesla was making them on average bigger, right, than the average notional here. Now you see your 90 average notional is 2.3, and you can see your 90-day notional is 8.6. Okay, so if we flip this button right here from dollars and we flip that to contract volume, okay, and you look at the contract volume versus the contract volume here. Well, it's 4-to-1. So you had four times more contracts on the S&P today, right, than you had on the Tesla. Now, flip back. Okay, at the same time that you've had four times more contracts on here, the notional value on Tesla today was $2 billion, where it was $1.54 billion. Okay, so it tells you that somebody's making large bets. When you get into the details like that, you can start picking it apart. Because the 90-day relative volume, why it's up, it doesn't tell us everything. Then you come across and you see 36%, 36.5% rather, are in puts. Now what that does is let you know that over 60% of what these people bought today, okay, in their total volume, okay, we know now that the majority were calls. Now, we went over this in Saturday's video, and there's going to be more that we're going to go over this Saturday, so make sure you do subscribe to the channel, click all notifications, so that you're informed when Saturday's video comes out. Saturday's video is usually much longer than these, and you can watch parts of it as the week goes along. It's all free, and I do not put commercials in the middle. All I ask is that if you find value, you share it. So you see your wedge line in here, you always clone these. Right-click clone button. Any service that you have that's a charting service will have that. It's very simple. You want the same trajectory. You can see your wedge line and how you're popping out of that wedge line, right? Come in here, and what we're going to do is just make this a 200. And then you're going to see that that's an EMA. I'm going to use open, high, low, close right here. Click on that. And now look, you're breaking out in a higher high. So I was explaining this to someone. They're like, well, the flag, I said, well, it's basically like a pendant because you're flapping in the wind. You're like, the flagpole's not long enough. And I'm just going to say this, like, don't get caught up. Get caught up in the patterns and what the patterns represent. Don't get caught up in, is the flagpole longer? What is this called? The important thing is, can I make money off of this? If so, how? Where's my stop? What's my position size? All of that stuff. Anyway, I would watch this. This was a really interesting move today with huge options. And someone's making a very big bet on the call side. Now, if you just take a look at Tesla and the open interest that's here, you can see this pretty clearly, how all of a sudden they're out there buying 220s. This is what their open interest is right now. So they're out there on the 220s. They're not out there buying puts up here, right? So I think that that's a very important distinction. They're out there buying calls, and they're buying calls out at 220, and now they start to go out to 230. Now, chart maturity, meaning this shows, we went through this yesterday. Let's go through it again. Open interest is updated every morning in the market. Okay, open interest is updated every morning on the market. So the open interest, okay, is not going to be updated until the morning. So when you have volume chart maturity and where you're going to be in the pecking order, this is going to show first before it's reflected in this chart the next morning. I hope that makes sense. So volume chart maturity. Well, you can see that you're over here, right? And you're at that 210 level. But we know from what's above us that 220, and now we know that that 230 level as well is going to probably be a little higher than anticipated. So they are slanting towards the out of the money calls on Tesla for whatever reason, and they are starting to raise up where they're buying their puts for protection. Worth paying attention to. AVGO came out with earnings this evening, and the stock's down about $10. We're going to cover the distance and what happened here. So if you take a look at it, they barely beat. This is not what we are looking for at all. We were looking for something substantive, and we were looking for some stronger guidance than we got. So just to be really clear here, we're going to just point out a couple things. Okay. 1032 beat the 1008. So 1032 is great. That beat the 1008 that you were looking for. 873 beat the 871. This is not in the video type of beat. Nothing ever is going to be very like that. But Broadcom second quarter sales, okay, were 8.73. And they're coming out and saying 8.85 to 8.72 estimate, right? So in other words, what they're saying here is, oh, we think we're going to be better by a little bit. And that's not what we were looking for. We were looking for that, just home run, right? And that's the reason why the stock moved lower. And I think if you look at that, it expects semiconductor revenue growth of mid to single digits year over year. Okay, it expects networking revenue growth to be around 20%. So people were looking for something a little more stellar, therefore it was a disappointment. Now if you look at the initial move, gaps up, comes all the way down. So we know that we're going to have to pay attention to this level tomorrow, right there, that Doji 760. That's where you reversed. You're going to want to make sure that you don't break that. And then you can see that into the conference call, when they started repeatedly saying AI over and over again, we actually got to 8.25. So you had a 75-point swing here, 65-point swing. I would expect this to be very active, either up or down pretty substantially tomorrow. And it's definitely something that we're going to want to pay attention to. The way I played it was I had puts so that if I wanted to buy stock, let's say when it was down here or bouncing around here and lifting into the conference call, I could just use the puts and trade equity in this to have a stop behind me. I guess all retail is not dead. You have Lululemon absolutely setting up to break out. What is crazy about these moves to me is that they move on this earnings, they keep staying in this range. So here's was last earnings and you were down $40. Here was last earnings and you were up $40. So we break down on earnings, comes all the way, goes sideways for a period of time, comes to this close, right? So your close is here, we're almost there before earnings, and then they're going to gap us up back to this one. Now, this was a fairly decent quarter. If we take a look and a quick snapshot here, Lululemon sees fiscal 23, 1174 to 1194, net revenue 944, 951. These were all decent numbers. Here you are, and you can see them, net revenue. It's exactly what we're looking for. Sees 247, 252 versus 250 estimate, 214 to 217 versus estimate. Okay, so, and here you beat, and this probably was what I think drove us, was just the fact that you crushed, and none of these names are crushing, right? So you beat by 30 cents, and you really just have not had any that have knocked the cover off the ball. So here we have, even though that their guidance was good, not great, the fact that you actually beat on the revenue front and beat on the earnings front, the stock is being rewarded. Now, if you take a look here, these are the kinds of names you always want to pay attention to. The ones that just rally and then they never even come down that bar. This never came down. That tells you everything that you need to know. You have no sellers whatsoever in here right now because you couldn't even test any part of this bar. And all you did was go across, spend about 20 minutes to 15 minutes here max, and then you broke out again, and now you're at resistance. I would strongly suggest that you put this one on your radar tomorrow and watch how it works. Of course, you have non-farm payrolls. Watch that 370, 378, and we'll see what happens. Have a great night, everybody.